It is Monday morning, and unlike last week, we get to work this Monday morning. We get to trade, we get to invest, we get to look at the stock market as it trades its stocks and changes prices. And it looks like we are headed toward a lower open on the news that tariffs are back. And it looks like there's going to be a little bit of a noisy news feed around tariffs. The U.S. put in a 15% rate around the world or across the board. And Europe, I think, retaliated and said, well, we could play the same game. And they had and I would say small, these are small percentages. I'm glad to see. But we'll see how that plays out. I think it's going to be a little bit of noise to deal with. Crude prices are going up, gold prices are going up, and we'll see where the market goes. I did see an encouraging stock market last week. I thought stock prices behaved in a way that I thought was maybe I think that some stocks began to kind of show, hey, put me in, coach. I'm ready to play. So these stocks here, this is the 1 week heat map. Look at that. Amazon was up. Google, Meta. These are biggies, right? Apple, Nvidia, Broadcom, Micron, Palantir, Uber. So
keep in keep in mind that Friday was monthly options expiration. So there's a good chance that those reacted to the market makers trying to limit their payout. So they can manipulate the market and drive the prices one way or the other to get closer to their max pain price. So Friday may have been unusual. I didn't mention that in my video that I did over the weekend, but I should have, because I was looking at the charts for some of the major players, and after drifting downward for the week, they all of a sudden, nearly all of them popped up on Friday. And it dawned on me that it was options expiration. So we may need to take that into consideration and definitely watch it over the next couple of days.
All right. Thanks for the additional information, because a lot of stocks did move last week. Now, is that kind of like that spark that's going to make something more positive happen? Well, that's why we invest, right? We're going to see what the market does. Year to date, stocks, some places are pretty bad. Like software is a pretty bad neighborhood to be traveling through right now, but I think there's a lot of value to be had there. Netflix, I heard the attempt to acquire Warner Brothers may not happen. They're giving Paramount an opportunity to make their pitch to acquire Warner Brothers.
Yep.
And we'll see. We'll see if Warner Brothers ends up with Netflix or over with Paramount. Netflix has had a rough year. They've had a rough probably 4 to 6 months after peaking. And one of the weaknesses that I see in Netflix is when you're somewhat small or medium sized and you are growing at fast rates, being really focused on one type of business is totally a good idea. But once you get big, diversification is not a bad idea across different revenue streams. Netflix has the misfortune of having to compete against Alphabet with YouTube. YouTube's the number one streaming platform on earth. Number two, Netflix. And Google Alphabet has search, Google Cloud, Waymo. They got a variety of businesses. So that's just a very strong competitor to go against that has a really strong diversified business. So I always thought that Netflix, and they are trying to get into games, but I always thought that they are vulnerable. As they get bigger, it's hard to be a one-trick pony and be big, because if that primary business has a pause and you get destroyed, your stock really gets destroyed. But we'll see how things play out for Netflix. Might be a good buy. I've made good money on Netflix over the years. So the stock price is going down. It's getting my attention. Right now, I see Netflix at a small discount, not enough for me to jump in. And I want this whole acquisition thing to be put to bed. I don't know what's going to happen there. Any thoughts on Netflix and their acquisition of Warner Brothers?
Yeah, we'll have to let this new 7-day bid window come and go and see what happens with it. I've been hearing that Netflix may have to up their offer. It sounds like they do want to acquire this asset, so we'll have to see what happens here.
Yep. Yep. Energy's been a real good space year to date. We're finishing the last week of February, and energy's done all right. Now, it's done terribly for a couple of years, so it's not like energy's been a great place to hang around for the last 3 years. Nope, hasn't. But so far, so good this year. Staples have had a good year to date as well, and we'll see how that plays out. And industrials just continue to go higher. Industrials has been a pretty good place to pick the right stocks over the last couple of years. Healthcare, the big pharma players have been doing well year to date, but some other places have been a little tough. Like United Healthcare is down 12%, and some other players are down quite a bit. Materials, of course, have been doing great. Boy, if you're in silver and gold, you are doing all right. But here's across the board, a lot of materials companies are doing well. So small sector, these are smaller cap companies versus the big giants over in technology and other places, but looks pretty good. All right. Regional banks have been doing okay this year, computer hardware. So that's where we're at. We're finishing the second month of 2026. And I'd like to revisit the VIX. And I think in other streams, you mentioned that this year in 2026, you had an expected move up or down. I forgot the percentage. So do you remember that conversation we had? Do you remember that piece that you delivered?
About the implied volatility?
I think basically you were saying that this year we're expecting the market to go up or down like 9% is roughly the number that I remember hearing. Sorry to put you on the spot. I just remember having that conversation probably about a month ago.
Was it related to the FactSet earnings? Let me
Maybe.
Let me make this a little bit bigger. I like to stay apprised of, because John Butters, he's the one that puts out this report, and he looks at every estimate for every company from the bottom up and rolls this up at the beginning or at the end of a year as a projection for the new year. So let me see if I can see change in the EPS estimate versus price. This may have been the document we were talking about at that point.
Yeah, and I've seen this website. It's really good.
They predict in aggregate a 7,900. And I think that's going to be a stretch this year, actually. It made sense at the beginning of the year, but I'm really beginning to wonder. So it'd be 15%. What number do you remember me saying?
9%, but it's early. My memory may not be 100% there. Yeah, so this year, it could be a year where I would feel like it's just a year that follows 3 real positive years. So, if I
Okay,
get through
so
with just a small gain, I'd be happy.
yeah, here's what we may have been talking about right here. So analysts tend to overestimate,
Mhm.
and John Butters also looks at their average overestimation based on all this bottoms up analysis. So if you take away that 5.9% average estimation, then you end up at 8.7 would be where the S&P would hit by next into this year.
Mhm. Okay.
So that may have been where that number came from.
Okay. Yeah, and I mean that kind of sounded right when I heard it because it's like, okay, I don't think we're gonna have a boom year, but um, so far I think we're seeing a rotation. We're seeing some stocks give up substantial value, substantial price, and may just be a year of adjusting. Investors moving into stocks that they feel more comfortable with. All right, so we've got a pretty good crowd. Looks like Ben 10 wants to look at XHR, so I put that on the list. We got a couple of stocks to cover, Ben 10, so we'll get through those opening stocks and then we'll get that one. Zubio, if you'd like me to cover a stock, become a member or buy a $5 super chat. We can look at a stock that you would like. Thanks for tuning in. All right, so we have earnings this week. We have Dominion announced before the market opens, so we're going to take a look at Dominion. And we're also going to look at GLW, which announced some news last week. Their stock was really moving higher. On Tuesday, we're going to see Home Depot announce. They had a pretty decent week last week. We'll see what they announce tomorrow. And I think lower interest rates should help Home Depot. Mercado Libre is going to announce tomorrow. American Tower, which is a REIT. I always thought American Tower would be a good idea because they own the mobile phone towers that we use everywhere we go. But it's never like look great fundamentally. Always like, well, conceptually, I like the idea, but their numbers just don't add up. So I've never been an investor. Realty Income, I think you're an investor in Realty Income, right?
Yep, that's my largest holding actually.
Yeah, and they're going to announce on Tuesday.
Tomorrow, Tuesday after the open.
And they they have a monthly dividend, if I recall.
Yep.
So if you're an income investor, these guys can, in essence, kind of pay you a salary each month.
Yeah, they're trading at all-time highs right now too. Real estate has done very well this month.
Good.
They're
Excellent.
expected to be the second biggest performer after tech this year. So they'll be the second, according to analysts, they'll be the second best performing sector this year.
Real estate.
Yep.
How interesting. We're going to start paying attention to real estate. Looks good.
It's only 3% of the market. So nobody, well, I shouldn't say nobody, but few people pay much attention to it. It's not very exciting. It's pretty boring, but when they perform, they can perform very well.
Yeah. And we've got Keurig, Dr. Pepper, NRG Energy, and then Workday. So it's going to be a pretty busy week when it comes to earnings. And of course, Wednesday, we've got NVIDIA. That is the big earnings after the market closes. And Daryl and I plan to do a live stream to cover the earnings live. Listen to the earnings call. See what the most valuable company in the world has to say. See how they're selling their GPU technology into data centers. It seems that from what the big hyperscalers have said, AWS, Azure, Google Cloud, and others like Meta, that the spending just continues, and it's actually supposed to accelerate in 2026. So I just have to expect that, hey, NVIDIA is going to come out with excellent numbers. Like, hey, we grew tremendously. We're making so much money. It's like awesome. And their forecast will really move the stock up or down. If they forecast that, hey, the boom's going to last for 2-3 years or longer, I imagine the stock could go higher. If they have any hint of a slowdown, the stock could really sell off. I don't think it's going to sell off a lot, but NVIDIA is going to be huge this week. In addition to NVIDIA, HSBC Bank, TJ Companies, which is the discount retailer, Salesforce, Lowe's, Bank of Montreal, New Holdings down in Brazil, Synopsys, which is a software company, Medline, Snowflake, Diageo. I forgot what they do, but it's going to be a huge Wednesday. More earnings. And after this week, I think we'll still have some earnings that are interesting, but it just won't be as big. So big Wednesday here. I think that's going to grab everybody's attention. On Thursday, some banks, Royal Bank of Canada, Intuit. I'm very interested in that one. And they may guide as to how they're doing, because Intuit, one of their biggest products is TurboTax, which is what people use to do their taxes. And if they guide and comment that, hey, we're just killing it out there, we're growing even faster, maybe the stock will rise, because it's been really beat up with the whole story that, hey, AI is going to hurt software companies. Monster Beverage is going to come out. Dell looks pretty good. It's priced really well. The data center is a good place for them to sell. I was thinking for a little while, for like at least a couple of days, hey, if these tariffs go away, it's going to help Dell, because they import a lot of their products from China. And if you get tariffs out of the way, it either increases the profitability that Dell is going to have, or lowers their price so they can sell more units and maintain their profitability. Both are good for Dell. But if we're going to have this, tariff kind of noise continue on, maybe it's not going to be as good as I thought. Warner Brothers going to announce. They'll probably give us an update. Well, they won't give us much of an update on the acquisition. Sempra, Vistra, that's been a big winner related to the data center. And then Friday, not a lot going on Friday. Fridays usually are not a lot going on. Macy's is going to announce, but they're pretty much not that relevant anymore. So big week of earnings. All right, let me check the chat, and then we're going to get into our first stock that we're going to look at, and that's Dominion, that announced their earnings today. Let's see here. We got Shadow Guy. Silver, more volatile than gold. You're definitely right, because silver had such a run, and it's already given up some of the gains, but it's going to be I don't invest in commodities. I don't have like I would say intuition, and I don't have fundamentals. It's a commodity, right? It's like, okay, well, what's it going to be worth in a year? I don't know. I think other people have a better sense of it than I don't. So I stay in my lane. Do you invest in commodities, Daryl?
Not really, no.
Yeah, I stay in my lane. I like the stock. I have success in picking the right stocks within my circle of competence, and I just want to keep making money there. If I get out of that circle, I'm likely to lose money or even get distracted. If I make a little money by being lucky, I don't want to have that occur. Okay. So Ben 10 got into XHR and IHC. So those are like
International Hotel Group.
That's not a bad pick up there, because hotels have been doing really well. They've been renting out their hotel rooms, doing well. Take a look at those. Shadow Guy, owns straight gold and silver. Man, that's been a really good. Gold has been excellent for what, a couple years? Been doing really well. Diageo's beverages, breweries, distilleries. Okay. And then Celsius. Celsius looked good, and then their stock went up, so it doesn't look quite as good, but there you have it. Sam, good to see you. Wants to look at LAMR. Okay, we'll take a look at that one. All right, so I'm caught up on the chat. So Dominion Energy provides regulated electricity, natural gas services in the United States. It operates through Dominion Energy, Virginia, Dominion Energy, South Carolina, contracted energy segments. Dominion Energy, Virginia segment engages in the generation, distribution, and transmission of electricity to approximately 2.8 million residents, commercial, industrial, and government customers in Virginia. And of course, North Virginia is the home to the most data centers in the United States. That's where the internet actually was started way back when. And it just ended up being where they had a sprawl of data centers. And if these guys are providing power, those data centers are probably asking for more power. But look at that. I'm surprised that they're not doing better. The 5-year doesn't look good. The 1 year looks pretty decent. They pay a nice dividend of 4%. And today they're selling off a little bit. And Dominion forecast annual profit below estimates. So that's one of the things, I don't invest in utilities a whole lot. I just don't find them all that desirable based on their profits, their free cash flows. And with data centers just growing like crazy, I would think, rationally, well, utilities are going to do great because they sell power and the power is needed by the data center. It's almost like oil, right? If you have excess demand, oil prices go up, oil companies make a lot of money. That's rational. On the utility side, I'm like, why aren't these guys just killing it? They're a utility. Now they are regulated, means that if you're selling your power to a consumer, a homeowner, a person, you can't raise your rates all that fast because you're going to affect people. And if they can't heat their homes in the winter, that's a real bad thing. So, okay, regulated. But if it's a business customer, it's a marketplace. If Meta is like, hey, we want to buy your power, okay, and you might have 25 companies asking for that power, so that you can negotiate better pricing if I understand the industry right. So I would say that, yeah, they have to serve their retail customer under regulation, but outside of that, for commercial, they could really make money. So I'm not quite sure why these guys aren't doing better. It's a $56 billion market cap business. I like the dividend. 4% looks pretty darn good. The growth has been good. It looks pretty good. 14%. Quarterly, we don't have the updated numbers yet. And let me take a look at their profitability and free cash flow. So you see, this is the line that always kind of bums me out. Negative cash, because they put a lot of money back into their ability to generate power. But their earnings per share has grown really well. So that looks good. And so earnings per share looks good. They issued out some shares, huh? Maybe they're expanding their ability to generate power and they're issuing out shares. All right. And just to take a peek at the cash flow statement, free cash flow is operating cash flow, which is very good in this case. You see how it's going up. I don't have a problem with that. It's just you have to put so much darn capital back into the business. And it may be that they're growing, so they're putting more, but even when they were before this whole build out, you see that you're just barely getting by. And the analogy I make is like, let's say you own a pizza shop and you make pizzas and you sell the pizzas, you make money. Okay, great. But if you had, let's say, these special ovens that you have to replace every year to 2 years, and you have to take all your profits and put them back into the pizza shop, well, that's not a business I want to own. I want those ovens to last 20 years. That way I can make as many pizzas and make as much money as I can. Utilities, it seems like they have to buy back their operation every year or 2 years. You see this cash flow just taking all that cash, instead of it landing on the balance sheet, it just goes into their uh, production capacity, their plants to generate power. And that's a piece that has never really been something that I liked. I'm like, don't like it. And I think other investors agree with me because it's a small sector. Let's take a look at the forecast. We've got 9 analysts covering it, and they think it's fairly priced. As we look at their forecast, it's going to be green. I wouldn't expect it to be anything else. Now, you saw that increase in CapEx, but I'm not seeing a big increase in revenue. So you got a lot of CapEx going into the business, but you don't have a substantial rise in the growth rate of the business. So so I'm arriving at the same place with utilities. These are the reasons why I just look at them and I go, oh yeah, I think I'll just buy more Amazon. I think I just buy more something else. But the numbers look good. I have to say, if utilities are your thing, it's going to look pretty darn good. So let me kick it over to Daryl, see what he has to say on Dominion Energy.
Okay, so they're a multi-utility industry group. I do see a base that is formed here. It took forever for it to give me a trigger. So I really question this $81 target because it took about 10 months or so to actually fire after it formed this base. So let's just go into just 1 year. I think their all-time high is probably around $74 a share. So that's going to serve as a bit of resistance from where they're trading right now. And then you want to put any credence in that base formation, that would give you a target to about 81. All of the moving averages are in the correct order and they're all rising at the moment. We are getting close to being overbought. We were overbought for probably a week, and then it moved out and started moving back higher. They have had a buy signal since on the daily view since about the 14th of January. Accumulation looks like it's getting back to a 52-week high, and money flow is bullish at the moment. Let me take a look at their weekly. They didn't quite get into overbought, and we're still on a buy signal in the weekly view. And over 3 years, their accumulation is at a 3-year high, and money flow has been pretty much positive since 2023. So if we go back to the previous chart, I mean, the kicker here was AI was introduced right here. So that started driving a lot of these utility companies much higher.
And it's interesting that leading up to that point, it was selling off.
Yeah, it was in a downturn.
Wow.
So I invest in ETR because they're my local provider. So I just wanted enough dividends from them to pay my electric bill every month, which they've done actually for about for the next 10 years, actually, because they've already returned all their capital to me, and I owned a lot of it. So I've sold off probably over half of it, and still it's my probably number 8 position. So it's still a big position, and they've returned all their capital to me because of this AI exuberance. They're still just a electricity provider.
All right. Thank you, sir. And by the way, I feel the same way about Chevron. I own pretty good amount of Chevron. I guess, probably $80,000 of Chevron stock. And they pay a good dividend. And the dividend, adds up quick. And I feel like, okay, every time I get that dividend, all right, that handles my gasoline expense for the next 2-3 months.
Yeah.
So psychologically, it kind of feels good. All right, cool. So I don't think this is right. The market just opened, but I don't think that's right. Let's give it a few minutes to do its thing. In the meantime, let's talk a little NVIDIA. Here we go. NVIDIA's open for business, selling its stock. Look at that. Up 2%. Man, what's going on, NVIDIA? Well, this is what's going on. It's up 39%. Of course, this has just been a rock star. This is a mega rock star stock, not just rock star. This is like if you combine 5 rock stars into one persona, that's what NVIDIA is. So they're done really well. Now, it's pretty flat here. So I look forward to seeing what Daryl's got to say on NVIDIA. I think it's going to be interesting to see or hear how he interprets what's been going on since August. Of course, this is the most valuable company in the universe, or at least the stock market. And PE ratio, forward P looks okay, 26.7. This year's is 47.2. Now, I don't think you're going to pay for many gallons of gasoline or much electricity with a 4-cent dividend. I mean, geez, come on, guys. This is kind of a rounding issue here. I think if you own NVIDIA shares, it might give you like, I don't know, 50 cents every quarter or something. Price targets are 34% above where we're trading today. Of course, these guys, you look at their fundamentals and it's like eye candy all over the place. Look at this. Jeez. And they're big, right? They're massive. 61 billion, 130 billion, 187 billion, growing at these massive amounts. So, and they're in this type of business where they designed GPU technology that it was originally made for the gaming industry, right? Video gamers, they needed to accelerate graphics on their screen so they could play these really fantastic video games on their PCs. And NVIDIA produced a GPU that enabled them to play, whatever title you liked at that era. And then the Bitcoin miners said, hey, that accelerator, that high performance compute is something that we could use so we can earn the credit on being a Bitcoin miner and making money. So the Bitcoin miners were the first wave of demand, but then the tsunami wave of AI showed up and started just consuming GPUs big time. And that's what really led to NVIDIA's massive growth. So you see this growth here. This was a lot of it having to do with, I think, Bitcoin and probably some AI, but mostly Bitcoin mining. Then we had kind of a pause because they probably had enough and we had a sell off in 2022. So that's what's been going on there. Now, their profits are fantastic. When you're that big and you're generating cash flow $77 billion, boy, that is awesome. Gross margins 70%, 75% in full 2025. So their profitability is through the roof and free cash flow through the roof. So these are the numbers that, I often say, if you want to get kind of a definition or an example of what great looks like, because One of the things I like to do is kind of keep it simple, right? Let me go study what great looks like. Obviously, Nvidia is great, but they're big market cap. How could they double in value again? It's hard to put my head around that. But if I can find great in a small stock, maybe a $5 billion company, it looks like this, man, I am all over it because the definition of great is easily found. Go look at Nvidia, go look at Apple, go look at Google Alphabet and study what makes them great. Well, here it is, folks. Margins, cash flow, growth, balance sheet's exceptional. That's what great looks like. Obviously, a lot of people would co-sign
That
that statement. Go ahead.
that gross margin number is going to be something that people will be watching on Wednesday because it was 75 and then has been creeping lower. And that's been a concern on investors. So we'll need to keep an eye on that number on Wednesday because Jensen has mentioned several times that he can get it back to that 75% number, and analysts continually mention that over the past year. So that's going to be a number to watch on Wednesday.
Yeah, I think you're right. So that's what great looks like. Let's see what the forecast looks like for Nvidia. Nvidia is being bought up today. 39 analysts cover a 32% discount. Again, looking forward to what Daryl has to say on those charts because it's kind of a flatter, kind of call it 8 months, 6 months since they really stopped kind of having this move on the stock. Now, the growth looks good. It's not as incredible because you keep getting bigger, right? It's really hard to grow a $400 billion number versus a $60 billion number. But the growth is still fantastic. This is the year that they just closed, that they're going to be announcing January 26th, and they're going to be closing out this year. Looking at the quarterly, the fourth quarter, they're supposed to deliver $67 billion of revenue, showing a 70% growth rate. Earnings per share growth is 70%. And it's expected that next quarter, the quarter we're already in, that's going to close April 30th, is going to grow at 65%. So this guide will also move the stock. If they're like, oh man, we're going to do better than that, we're going to be closer to 70% growth and we're going to be more profitable, that'll be a help to the stock, or vice versa. If they're like, well, our customers trying to digest all the GPUs they bought, and it might be a light quarter, boy, the stock will be under pressure. The forward P, this is interesting. Look how it's going down. So Nvidia going down to 17 if they continue to grow, making their earnings per share much bigger. So just the math works out so that the PE ratio goes down. So this is a fantastic business, and it's hard to fathom at what point are these data centers going to stop consuming so much darn expensive technology? Now, at some point, these businesses have to slow down. I don't know if they're going to stop, but it's kind of, you remember, or I should say, I'm going to refer back to the 1980s. Let me go in the way back machine. And there was the arms race. The U.S. just kept spending money, just like crazy. And the adversary, the USSR, couldn't continue to spend money. They're like, no, we're out of money. We got to feed our people and stuff. So that's the arms race. And the U.S. won it economically, if I am understanding it right. Well, the arms race in technology, it seems like it's happening. But geez, man, I know Microsoft stock is not doing well. Amazon stock is not doing well. Those are big spenders in the data center. Now, could I see them continue to spend for a year without it really bothering me? Absolutely. If they're building a business for the future, keep doing it. But if we're sitting here 3 years from now and we still aren't seeing return on investment and they're still spending like that, I'd be really concerned that, hey, that business is permanently going to be or I should say, the impact is going to be negative over the long term on those stocks. So at some point, it's gotta slow down. It's got to slow down is my expectation, but I don't know when that's going to happen. Let me kick it over to Daryl. I'm looking forward to seeing what he has to say on Nvidia. And look at that; it's pretty flat.
Yep, that was going to be my first statement. Is they have definitely been trading sideways. Last year, about this time, I had a price target of 204 to 208, which they hit on the 29th of October. But since that, man, they have just been trading sideways. They have an implied move of 6.3%, so that's basically plus or minus $12 from their close on Friday. We're already seeing a couple dollars of that to the upside. The RSI is in positive territory, above 50, moving towards 60. PPO is moving out of the midpoint, so it's just barely above the 0 line. They went into distribution at the end of the year, so people moving out of technology type stocks and into dividend payers and consumer staples, more safety stocks. And the money flow has been negative pretty much since January. I'm not so sure on Wednesday. We might see an initial swing one way or the other, but I expect them probably in a week to be not too far from where they're trading right at this moment. Let's take a look at the weekly view. So in the weekly view, they are above an RSI of 50, close to 60. The PPO is still declining, but in bullish territory. And on the weekly view, accumulation is still pretty high and money flow is pretty much neutral at the moment. So I don't know what we're going to see on Wednesday.
I think I think the news is going to be positive. It's just what level of positive is it going to be? Like, wow. If it's wow status, stock continues to go higher. Maybe they have a news release where it's like, hey everybody, there's a new market. You know, there's something out there that is going to create a new revenue stream that's going to make us even more valuable. Okay, that could be super positive. If it's a question of, how long can you sustain this for, and the questions are more about how soon before you slow down, then you could see the stock price get under pressure. When I look at the stock, here's my valuation based on cash flows. I can't get there on their stock price. It's priced 19% too high. I think each share is worth $155. I am being pretty generous on the cash flow. Okay. It's not like, hey, I don't get that these guys are freaking rock stars. They are, but I'm growing the forecast as well as I can. And on Wednesday, I will update this live in front of an audience during the watch party for Nvidia. So this guy here, okay, that's where we're at. Now I'm agreeing with the analysts who I think they were at 37, but the stock did move higher. So we're right on the button. Look at that. Because my pricing changes as the stock price changes. This is a real update here. So I'm agreeing with the analyst, doing my own work. I give them a P of 36. They deserve the 36. Growth rate of 25%. So in my book, Nvidia is discounted by 6%. And the question is, do you want to own the most important semiconductor stock in the stock market or not? That's the question. It's not about, hey, it's really being misunderstood and it's priced wrong. No, it's priced right. It's priced right. Do you believe that it's going to be NVIDIA is going to be in demand for the next 3 to 5 years? If the answer is yes, then you're in. If the answer is I don't know, then it's your call. If your answer is I doubt everything they're saying, then maybe it's not the right stock for you. But that's where we're at with NVIDIA. I was curious to see, I'm going to open up my app here. Let's update this guy. This is on the Rational Stocks website I created. And this is, I'm curious to see what the result is. I've been testing this as often as I can. So let's test this out. This is going to grab all the historic data from Yahoo Finance. So we'll pop in the ticker. So the growth rate, now this one's a little tricky because like when I do it manually, I can kind of change the years, but we're going to go with growth rate of 25%. And actually I typed that wrong. Got to go 0.25. Discount rate 0.075. Terminal value growth 0.04. So when I hit analyze on that, yeah, so I'm agreeing with that. My manual work was right around that number. I think I was at 19. All right, so now we're going to go with the earnings per share value. Okay, this is valuing the free cash flows. Let's value the earnings per share. So earnings per share growth. I'm looking at the forecast sheet on Stock Analysis, and it's really going to grow here in 27, but it's going to kind of drop the growth rate. So I'm going to go with 25% growth rate on earnings per share. And I like this how I built this, which is, if you think about 4 years down the road, what is the PE ratio you expect? So I'm going to go with 25, and discount rate is 0.075. And it's priced about 4% overvalued. So, the tool is working because we are right in that zone. And FYI, you have access to this if you go to the Rational Stocks website, become a member. First month is free, and you can work with this tool. And I'm working on making it better where it's going to be more descriptive and you're going to be able to store your valuations. That's not going to happen for maybe a couple months, but I'm working on it. It's going to be hard work because this app is pretty simple just to give you, a valuation. I put a lot of time and energy into it, but compared to what I'm building, this is pretty simple. So looks like NVIDIA is priced about right. And we'll see where it goes. This is, NVIDIA reminds me of Apple because Apple, obviously, the big move was, 10 years ago. And it was like, wow, well, I get it, right? Everybody's using an iPhone and it's a great, great company. All the things that were happening to it were like, well deserved. Then they got into this slow growth zone and the stock continued to work. And I'm like, wow. Well, the investor really likes, and I forgot the term. I heard it recently, which is, I think it's either confidence premium. I think it is. It's kind of a premium that a stock gets because the level of comfort that the investing community has in that stock is pretty high. Apple certainly had that. People were very comfortable in that stock, so the stock continued to rise. Warren Buffett owned it. And NVIDIA is maybe going to take on that kind of, image or classification of people are just going to be comfortable with it because it's really important technology. It's not going to go anywhere. AI is making its way into a lot of things we do. So anyway, it's going to be big news. Any last thoughts on NVIDIA, Daryl?
They have a really good price to earnings growth ratio to the PEG.
Mm-hmm.
If you compare that to a lot of other companies, they seem to be, according to that particular metric, seem to be priced really well for their growth. I think
it seems
Peter Lynch popularized that particular metric.
It seems, like NVIDIA's fundamentals are like eye candy. Every ratio looks like, wow, man, this is like, you only see this once in a blue moon. And yeah, that's right. That's exactly right. All right, so let's take a peek at this heat map. Who is going up? Who is going down? Let's take a look. Oh boy, there's some red out there. Let's take a look here. So, of course, NVIDIA is nice and green, sitting there, just sipping a cup of coffee on a Monday morning, looking at the small fires that are ablaze in the forest of stocks. Microsoft down. Geez, what's going on with Microsoft? Stock market does not like Microsoft. It is sold off big time. I've been buying Microsoft stock. It's not because I'm like, want to prove a point. I want to make some money. And geez, the market's just nuts. It's selling off Microsoft. The software space is under threat again. Amazon's under pressure again. Credit cards are under pressure again. Why are credit cards under pressure? Google's up a little bit. Telecoms are up. Now, this is a safety zone right here, in my opinion. People will need their broadband. They'll need their, mobile phone service. They will not cut that off. Netflix is down. Healthcare space is having a good day. Eli Lilly, I think Novo Nordisk, their weight loss drug wasn't as effective as Eli Lilly. So Eli Lilly's picking up a bid and Novo Nordisk is crashing and burning. Energy up again. Look at that. Exxon is up 2%. I know some members of this community own Exxon. Good move. Look at that. Exxon's been doing well. Chevron's up. I'm sure all these other guys are up as well. Utilities are up. Materials are up. Gold is up. Look at that. Real estate is up. And note this, guys. I heard Daryl say, hey, real estate's supposed to do really well. I'm going to look at real estate a little closer because I own one REIT and I also own real estate assets that I rent out. Maybe I could add another REIT. Maybe. I'm going to do some homework there. So that's what's going on the heat map overall. So the VIX is at 19.63. What's your interpretation of that, Daryl?
So that's measure of volatility over the next 30 days, and 19% equates to an annualized number. So it'd be 19% volatility over the next 30 days. Well, that's over the year. So it's annualized.
And what 19%
still a big number.
What 19% can mean is it could go up 10% and then drop 9%. That would be 19, right?
Yeah.
The variance is what you're measuring.
Yeah.
Okay.
Yeah.
Thank you, sir. The Dow is down. S&P is down. NASDAQ is down. Now, I had Chinese food with my family on Saturday. Nice place. And of course, they give you the fortune cookie after your meal, along with the bill. And my fortune cookie said something to the extent of something positive is going to happen for you on Tuesday. So I'm looking forward to it. Maybe tomorrow we're going to have a huge rally. But I wouldn't mind seeing this market pull itself up. That'd be a good sign on a Monday. We'll see. We'll see if it goes up. All right, let's keep rolling. Covered NVIDIA. Looking forward to Wednesday. Ben 10 is dropping owns an investment in XHR. He's in the hotel business. And now the hotel business, I have to guess high level based on the travel, data. It's probably doing really well because airlines are selling a lot of tickets for people to travel. Airbnb announced really good numbers. And I don't remember what bookings had to announce, but I looked at Airbnb closely. So the data around travel it's very good. And it actually gives me an impression that the economy is doing better than what I hear on the, regular news that, oh man, it seems like the news gravitate towards negative news because they grab everybody's attention. But the data is like, hey, people are traveling. Market cap, $1.6 billion, P ratio 29. They pay a nice dividend of 3.5. They're selling off a little bit today. The revenue is going up, a little bit. Let's look at the quarterly, and it's flat. Last quarter was flat. When did they announce? February 24th. So they're going to announce in a couple days. Tomorrow, actually. Analysts think it's priced a little too high. It's priced about 12% too high. And the revenue is supposed to grow single digit. So this isn't really like all that exciting. Earnings per share looks, why is your earnings per share going down? I would think that it'd be going up, but my logic is you're renting out your rooms. Why can't you, have a better price? And you see that the forward P is not looking good. So these numbers are a little shaky. Just, calling it like I see it. So, okay. Let's take a look at their free cash flow. I kind of glanced over that real quick. So, all right. So is this a REIT? Sorry. Got to back up a little bit. So this is a REIT. So I can't use free cash flow. You got to use the earnings per share. Make sure that they could afford the dividend. Let's take a look at the dividend here. And this doesn't show it to me exactly the way I like it, but I'm seeing a lot of problems in this stock. The fundamentals aren't adding up. Their fundamentals are kind of getting worse over the next 2 years. So either analysts have it wrong, or if they have it right, I wouldn't be touching this because the fundamentals just don't look good. So that's my observation on this stock. It has had a good chart here, but let's turn it over to the guy who really knows charts, and that is Daryl on this stock.
So I went back to their inception, which is in 2015, and I found this auto support resistance line touching as many support and resistance levels as I could, and this is where it ended up. So they're not too far away from where they've traded at acquiescent levels for the last 11 years. They're slightly above that. Because it's a REIT, it's probably getting, if the fundamentals aren't looking very good, then it's probably just benefiting from the treasury rate coming down and people moving the price up on that. That's what's happening to most every REIT right now, and why a lot of the ones that I hold are trading at near all-time highs or at all-time highs. So all the averages are in the correct order. The 200-day had been declining. It finally reversed and started moving back higher in November. The RSI is right around 60. The PPO is in positive territory. Money flow isn't quite back to a 1-year high, and the money flow is in bullish territory, just barely. So let's go back and just take a look maybe at some of the most recent highs. It's currently trading at 15, 18. Let's just go back all the way. So it's traded as high as 70 or at 20. So your upside isn't very much. You got about $5 more back to all-time highs. So this isn't one I would be terribly interested in, either from the fundamentals that we quickly reviewed or the chart.
Thanks, Daryl. So I'm trying to do something for the first time, and we'll see if I pull it off. All right. So here I took a snippet of the financial forecast. It might be small for you guys. I apologize. But I'm looking, because when you do a valuation on a company, you have to make some decisions, right? And as I go through this, the revenue is expanding. So that looks good. Revenue growth looks good. For some reason, their profit is really going to tank this year. And I don't understand why. So I'm actually going to change this to 0. Just have it not grow. And as I looked at that same forecast, let's see if I can get that back. I cannot. So no big deal. I think you guys get the point. Now, in the future, the P ratio, if this is a quality company, 16 would be something I'd be willing to pay. Discount rate's a little higher than NVIDIA. This is 8% versus 7.5. And I put a note on, when you go to the valuation tools, earnings per share should be used for REITs. It should be used for banks and so forth. Discounted free cash flow should not. And when I even go to 0, it's going to be overvalued. The fundamental data just didn't look all that great. So this one here would be a pass for me. And the reason for it is there's some REITs out there that are terrific. They got everything. They got the right fundamentals. I value them. I get discounts on them. I'm all over them. This one here, why take a chance, right? Why take a chance when you have choices? This is a market. It's a market of stocks. I get to pick the best one that's going to make me the most amount of money. So I am a passer of XHR. And but good luck to anybody that's invested in it. Hopefully the fundamentals improve and we'll go from there. All right. So we got through XHR.
Let me show a visualization on that in Fast Graphs.
You got it, sir.
So they're trading right at their normal market multiple.
If I could say, sir,
only 9 times.
If I could say real quick, it looks like this stock is taking a gap year and traveling Europe. What's with that big giant gap?
That was COVID.
Oh.
So that was pretty ugly. So let's just look at what's your opportunity here. If you're a retired person and you're looking for some income, this isn't too bad of an opportunity. But if you're younger, you're looking for something that's going to give you growth. Let's just look at the closing price on Friday. This only updates at the end of the day. And let's just go out to the end of 2027. You're only looking at an annualized rate of return of 7%. So if you want your money to sit and give you 7%, if you're retired, that's probably not a bad thing. If you're only pulling out 4% to live on, you're still growing your portfolio and it's probably not terribly unsafe. But if you're younger and you're looking for growth, this one isn't going to give it to you. So it's nice to have some visualization on those kinds of, when you're looking at those kinds of opportunities.
And again, I like to look at stocks in kind of a peer group, because even if you might even find a stock that's looking good, but what if you look at its peers and there's a stock or two that look even better? Well, I'll buy those. So I know with REITs, there's good choices out there. So I would look at a solid 10, pick out the one that looks the best, pick out the one that's more consistent or reliable, because this is our hard-earned money that's going to be invested. So I'd rather just pick a winner, and it's a winner this year, next year, the year after, and we're off to the races. All right. Looks like this community of investors has got REITs on its mind this Monday morning. REITs. We got Sam wants to look at Lamar Advertising. Of course, when we drive around, we see a billboard up there. The fine print or an emblem toward the bottom, you'll see Lamar. And these guys own those types of properties so that advertisers can use that billboard space and advertise. Market cap, 13 billion. Earnings per share rising nicely. Forward P of 22.9. Nice dividend of 5%. Looks good. All right. 1 year, it's down, but I see the charts kind of trending higher. 5 year looks pretty decent. If you go 53 plus a dividend, you're doing pretty good. You're up there around, if you compound that dividend, about, I don't know, 78, 80% overall performance in the stock. It's not bad. And if you bought at the right times, boy, you're killing it, because you could have bought at $78 a share. You're up at 130. So you bought here, you're being paid this dividend, and the dividend rate's probably even higher because you bought it at a lower stock price. So this could have been a nice stock. Maybe it's a nice stock now. Let's take a look. I like advertising of this type. Okay, let's take a look at the financial data. So they're growing nicely. The growth is a little slow, but what do you expect, right? These guys are not, they're not selling GPUs like NVIDIA. They're selling advertising space. All right. And I know that these guys, this industry, they're kind of upping their game. And rather than just having, billboards where you kind of wallpaper the advertisement up there, they're doing these digital displays where the ad changes like every, I don't know, 10 seconds or so, 15, 30, I don't know. And I have to say, those things catch my attention. Yesterday, I went and visited my mom. I have to drive about roughly an hour through the Los Angeles highways. And there's a couple of these billboards, and they catch your eye because whenever you have something change, right? I think our eyes and our minds are trained to pay attention when something happens or something changes. 4 analysts cover this stock. They think it's fairly priced. Let's take a look at their forecast. Slow growth, but the growth is going to improve in 26. That looks pretty good. 4% the year after. Profits are going to expand. That looks pretty good to me. Yeah, it looks pretty good. Had a little bit of a setback on profit in 24, but nice and green. Nice and green across the board. So that's looking good. It's looking pretty good. Let me kick it over to Daryl. See what he thinks of Lamar. See if this is going to make it into the circle of potential investments.
So I went back a few years and I found they usually trade around 98 or so. They are trading above that now. They're trading slightly below their 21-day moving average at the moment. The 50-day is increasing. The 200-day is increasing. The RSI is going down. So I wonder why that would be when REITs are going up today. Yep, every single REIT I own is going up. So I don't know what's going on with this one. Mine's going down. Normally what I do, let me just go to one that I own. Okay, I'm going to have to switch to just a different set of charts. And I will select Realty Income. So whenever I'm charting a REIT, I normally always put the 10-year treasury rate as the second panel is doing, and does that correspond to what I'm seeing in the price? Because typically you will get some correlation between that at the moment. You can see, Realty Income is up. NNN is up. I don't have Vici on here, but let me see. I may have ADC. They are up. So I'm trying to get an explanation on why Lamar would be down. Normally, REITs kind of tend to move together, but they are down 3% today. RSI is below 50. PPO still in bullish territory. We are getting a sell signal today. So we'll look at the weekly view here in just a second. We do have a little bit of accumulation since the beginning of the year. That's not uncommon with what I'm seeing in other REITs at the moment. They're all kind of moving higher or being accumulated. So let's take a look at the weekly view, because we are getting a sell signal on this one today. And we've got a sell signal on the weekly view as well. So I switched to weekly data. That removes some of the noise. PPO is still in positive territory. This is looking at 3 years worth of data, and we're pretty much right at max accumulation. The money flow is still positive, but we do have a declining RSI. So I don't know what to think about this one. I don't know why it's going down today when all the other REITs are going up.
Well, it's funny you say that. Let me kick it over to my screen. So I use the earnings per share evaluator on my website, and I'm using a 5% growth rate. This is the snippet that I took. And here's the growth rate on earnings per share. It's supposed to grow 3%, 26, and then 10%. So I'm kind of looking at maybe 5% would be conservative, but it's what I would go with. And I'd go with the P ratio 20, discount rate of 0.075. And I think the stock's priced too high. And, every investor needs to make these decisions, right? Because we invest in stocks that we want to own, that stocks that make sense to us. And REITs are good. But I'm trying to find the cream of the crop. I'm not trying to value stocks to give me a reason to buy. I'm trying to value stocks to highlight the stocks that look great. And this one doesn't look great to me. I am an investor in CTRE. That's been a great stock. And I've owned other REITs. Maybe I should own another one, but I'll do my homework and I'll be careful with it because I'm after stocks that are going to double in value every 5 years. And REITs could do that. You just got to do your homework. All right. So while we're on my website, I'll just kind of give you guys a quick tour. If you guys haven't been there, take a look. You're going to land on a website that looks a little different than this one, but you just go to where it says member content and you'll get right back into what's going to be the permanent website here. I'm just where I'm building a landing page. Everybody's got access to this, and you can take a look at what I've been producing there. And some things that have come up. Of course, you can take a look at the contest stuff and see, looks like Genetic Smite still off the front, leading the pack. Daryl's in third place with OKE. Juicy's with Nebius is in fourth place. iRen is within striking distance, so you can take a look at that. Started a blog. So in this blog, I'm going to try to post regularly. This morning, I put my analysis on Salesforce. Salesforce is going to announce on Wednesday. You can take a look at it, but I think their fair price is $4.15. And if you look at, they've been growing their earnings per share. They've been growing their free cash flow. They've been growing their revenue. And this stock's under pressure. So it's like company is getting stronger, better, faster, more profitable. Stock price is down because of the fear the market has that, hey, Salesforce is going to be hurt by this AI thing. Got it. Now, if you want to go to the valuation tools, they are right there waiting for you to go use them. Take a look at them, beat them up, use them for your research. You have to sign up. First 30 days are free. You can also take a look at the moat research that I put together. This is really important to me, and hopefully it lands with some of you, because this is really the difference between buying a stock that's going to make you much wealthier, and maybe a stock that's going to surprise you to the downside. And really, we've talked about NVIDIA today. This is in the green, high growth, high margins. This stock, it's obviously created wealth. We've talked about some REITs like Care Trust I would put in the gray, which is buy it with the right price. Don't buy it, don't overpay. It's very important you buy at the right time, at the right price. Set yourself up to make good money. CVS, same thing. It's in the gray. Buy at the right price at the right time. And then there's some red stocks. These are stocks that, man, how are they ever going to survive in the future? Macy's, revenue is contracting. Profits are really contracting. Everything's contracting on poor Macy's. 100 years ago, you could say this was Walmart 100 years ago. But 100 years ago is way, way, way back in the rearview mirror. We can't even see anything back that far. Gray is a linear TV company. Obviously, their industry is under threat. So yeah, some investors can make some money here, but I feel that that's more of a distraction than anything. I want to find great businesses that are ideally in the green, and that's what I try to do there. So you would have access to that. Member events, we have calls coming up, and I don't have access on this particular user, but there's a calendar. It shows you the member calls and so forth. And I started my charts. I'm going to be creating charts, putting them on here, just kind of looking at some analysis and sharing that with the community there. And then the stock watch list is on there too. This is the watch list of stocks that are regularly valued, up to 378 total stocks. So you can take a look at that. These are just sorted alphabetically, but you see all the discounts here, and you get access to all that research on the website. So take a look when you get a chance. I'd really appreciate it if you did so. What is going on with your channel, Daryl?
So I did post my weekly chart analysis, and then earnings will be coming up. So I've been populating my worksheet with the relative strength of each one that it's going to be reporting this week, and the overall price trend, the implied move, and the short interest. And I also put that information out in a short. So today I put out OKE. These are basically 1 minute long. I write the scripts, collect the graphics, and then I use AI to generate the 1 minute video. If you're wondering who this guy is, that's Gavin, my AI generated person. But he'll read these 1 minute scripts to you, tells you what the relative strength is, and what the overall price trend is, what the short interest is, what the implied move is. So in 1 minute, you can get an overall view of what the company's looking like as they're moving into earnings.
Awesome.
You can get to my YouTube channel, clicking this, taking a picture of that QR code, or you can just enter the name right here in YouTube. And I will be doing 2 detailed ones. I plan to do one on NVIDIA today, and one on Figure Solutions. They'll be more detailed. These are anywhere from, this one's 20 minutes long. They're anywhere from 12 to 20 minutes, but I go into a bit more detail than I do just those 1 minute shorts, and provide, all the charts and what have you on those.
Nice work, sir. So it looks like Mike is on, and he's saying that he requested 2 stocks, but man, am I missing something? I don't see his message.
Yeah, I don't see a message from him either.
Okay.
Maybe he sent you something direct.
I just checked Discord, and FYI, everybody, if we're streaming, speaking for myself, I don't check Discord. I got enough going on. So I did check Discord, and I glanced at it. I didn't look at it all that much. I didn't see anything either. So Mike, sorry if we missed it. please let us know for the next stream. We'll be streaming on Wednesday. All right, so it looks like things are not getting any better for, man, financials getting hammered. Why are financials getting hammered? Huh, okay. We'll see how that plays out. Looks like consumer discretionary is getting hammered. This is tariff related. I can understand that. And then travel, why would travel be hit? All right, we'll see. Here we go. So Mike wanted to look at Path and Monday. Okay, so we can take a look at those. So energy still working, healthcare, staples, not a bad place to be. All right, so let's take a look at Path. Is a interesting company. Their growth rate, wow, what's going on here, folks? Yeah, the software space is just getting hammered. Now, the Path business is something super it's super interesting. The piece that is underwhelming is their growth rate because they're not that big. And I could point to software companies that are growing faster. So this is one of the areas of concern that I have. Why aren't you growing faster? Now, this growth rate is better. 16% is much better. So October 31st. They have to keep that going. That is a good growth rate. Okay. And software right now, I'm not putting any additional capital into software right now because the market's just destroying these stocks. And when will the destruction stop? I don't know. I think it's going to stop. I think it's going to stop in 2026. And I'd rather just wait for that chart to start going vertical to the upside. Then I'll buy. That's my story on UiPath. The fundamentals, I like the business. I like what they do. I think it fits what we're doing today with AI, what we're doing with machine learning and using computers to do tasks that are pretty mundane. And you can do them better, faster, quicker, less expensively if you have a computer do them, if you have the logic out there. These guys here are expected to keep growing. But again, this growth, man, you got to really float my boat on growth. You got to grow faster. You're small. You can become Zoom, and Zoom just grows a little bit, and the stock's not doing anything. DocuSign's kind of beginning to look the same way. And if you become a one-trick pony that doesn't grow, it's just not gonna work for me. Been there before, and I have access to some other businesses that are just better. Like Intuit is growing faster than this, and Intuit's massive compared to this. Okay, so I don't want to be locked in unless they prove to me that they're going to grow faster. So those are my observations on UiPath. I'll go ahead and show my valuation on Path. Again, I like the business. I think it's a cool business. They have a grasp on the future, which is their technology. I think it's discounted. Not going to argue. But I don't think anybody's going to argue with me how the software space is just getting smashed. We have some really good businesses here that are just getting smashed. So when will the smashing stop? I don't know. But I'm going to wait until the smashing stops and the appreciation starts, and then I'll invest. Over to you, sir.
Yeah, they're not very, very far away from all-time lows. I think it got down to about 9, and based on what I'm seeing in the market, they're probably not very far away from that. I've been warning on this one for a while. We had a bearish negative divergence on the RSI clear back in October, November, and December when we were looking at this. Bearish negative divergence on the PPO. Nobody wants this stock. Look at that distribution. So if you're buying it, you're swimming upstream. So just keep that in mind. That we had a green line here that was support. I'm going to have to change that probably here in a couple days because now it's going to become resistance. So I don't know what to tell you on this one. I would get out of the way of the truck.
All right. I don't like dodging traffic, Daryl, so I think I'm just going to stay off the street.
Yeah, it's like playing Frogger.
Yeah, that was in its era, that was a pretty fun game, but geez, video games got more complex. Back in the good old days, you just had a joystick and you tried to avoid traffic. Back to stock investing. Monday, CRM. Well, Monday does a variety of things. And this one here is just getting destroyed by the market. This one here is a smaller company, 76% drop in the stock price. $71 per share. Now I'm going to look at the book value. I forgot to look at the book value on Path, but let's take a look at this one. And I don't think the book value is going to be all that high because these are software companies. They don't have assets, but the forward P is 17.6, discounted by 144%. Now that's a discount, folks. Growth is good. Very good. Got it. I'm going to be a broken record. I apologize. Small company, growth, fundamentals look good. Profitability looks excellent. Okay. 89%. 89% growth, gross margin. 25% free cash flow margin. These are excellent numbers. That's the kind of business that I want to own. But the market's selling this thing off. Just doesn't want anything to do with Monday. Now, this one here, I would say is susceptible to an AI challenge because their software tends to be a little simpler, maybe made for smaller businesses. Now, that's not the whole story. Second piece to it is Monday doesn't have a really strong brand. For example, it's Microsoft. If you go to an accounting department and you say, hey, what kind of spreadsheet package do you use? 99 out of 100 people would probably say Microsoft Excel. So as employers hire people, they say, okay, we'd like people with the skill set that includes the use of Microsoft Excel because our staff uses Microsoft Excel. That tends to establish a pretty strong network effect, network power, network value. Monday doesn't have that. I don't think Monday is like a regularly used tool in business. I think they're trying to cut into its business. There's other products out there that are trying to get this small business marketplace. So Monday could be disrupted. I think the market's telling us that. This is right in the center of my circle of competence. At this point, 30 years experience working with enterprise software. So we're talking something that I know inside and out. And is the Monday business going to work? Maybe. If it does, could this be a multi-bagger? Absolutely. But if it doesn't, could this thing go towards zero? Yes, it can. Is this thing going to be able to protect itself, grow itself like Intuit? No. Intuit has these brands that have been around for 40 years. TurboTax. TurboTax is an automatic for me. I've used TurboTax for, 35 years. Every year. And it works. I know it works. Do I want to shop around for another package? No. I just want to do my taxes, get done. And Intuit has QuickBooks. A lot of businesses, they've used QuickBooks for 30 years. Do they want to switch accounting packages? No, they don't. The switchover cost is very difficult. Could bring on risk to a business where, oh, we got the billing thing wrong, billing module wrong, and all our customers are angry at us because we forgot to bill them for 2 months. And now all of a sudden we surprised them and said, you have to pay us for 3 months. And then now they're really angry at us. You don't want that as a business owner. You want steady, controlled back office operations. And QuickBooks gives you that. And it's an institution. It's like Excel for small businesses. Monday doesn't have that. They don't have that luxury. They're in a crowded market. This enterprise software market is crowded. So Monday's a pass for me. It's too risky. Market's just selling these things off like crazy. I'll show you a discount on my valuation of the company, but that's part of our decision as we make decisions on stocks, right? We have to read what's going on in the market, and the market's telling us software is the place where we may not know what's going to happen, but we're going to sell it off until we know what's going to happen. Even Intuit's being sold off hard. So this is going to, man, it's going to be hard to read at some point. And software stocks have made billionaires. The Microsoft, right, being in the 90s, it created the wealthiest guy on the planet, Bill Gates. Like if you saw in the 90s and the first decade of the new millennium, if you looked at the wealthiest humans on that top 10 list, I would say 6 out of the 10 were in the software space because it's so profitable and it's just low capital. Once you have your brand, once people use your product, you're doing great. But right now it's under absolute attack. It's absolutely being sold off. I think this is going to be a great place to make money. I really do. You got to pick the right horses. You got to buy them at the right time. I am not putting any money into this space other than Microsoft, because Microsoft has a cloud infrastructure business that I think people are underestimating. And I think the cloud infrastructure business is a lot like a REIT, like a real estate asset. You build it, you rent it out, you make money, consistent money, and so forth. So let me show my valuation on Monday, and then I'll kick it over to Daryl. He had a pretty stern conversation with us on looking at paths. So I'm kind of going to brace myself to what he has to say on this one.
Put your seatbelt on.
That's right. I'm going to put my chin strap and my mouthpiece in. So Monday, discounted 68%, folks. I telegraphed it. Yes, it's discounted. Am I buying? Absolutely not. Not right now. It's just too dangerous. The market's telling me stay away. I'll tell you when to buy it. And I think Daryl's going to tell me when to buy it. Over to you, sir.
So I'm looking at their entire life, and they are at all-time lows right now. And there are some software companies that I expect to survive. I'm still out of the road. I'm letting the trucks go by, let the market figure out what it's going to do, because it could be a couple of years, even in Microsoft's case, which I am an owner. So I feel that Microsoft is a great company, but I'm not picking up any more shares right now. And basically the reason for that is over the next year, I expect them to pretty much trade flat. I'm not able to select that, but they're trading above their normal PE. And if I just draw that across there, even at the end of next year, if they trade at their normal PE, they're just not going to do anything price-wise this year. So this software thing is affecting even somebody as large as Microsoft. It's affecting Salesforce. It's affecting, I can't think of some of the other ones, but this one.
SAP.
Yeah,
even
SAP.
Palantir.
There you go.
Got a long list of companies that are getting smashed.
This one, I do not expect to survive. I think when you said this one could go to zero, I would not be surprised if this one is one that's a casualty of AI software.
And these small caps, right? Going to zero happens fast. Okay. It's not like,
yep,
they have a customer base with, 5-year contracts and stuff. No, it happens very quickly where the user base abandons the product and then they can't pay their staff. And you see Anyway, so it's just not pretty. So let's observe, right? We're investors, and if, to use an analogy, if the weather is horrible, we stay inside. We still want to go work. We still want to go. Maybe we had a project out in the yard that we wanted to get to. We really want to get to it. But if the weather is horrible, we stay inside. The weather is horrible for software stocks. And I don't know when this blizzard's going to be over. We got to wait. We got to wait until the market tells us, all right, the blizzard's over. It's time to invest. All right. Good stream. I wish I could say the same thing about this market, because some of my stocks are getting smashed again. Although some of my stocks are doing okay. Although Amazon's one of my stocks and it's getting beat up. Citi's one of my stocks. It's getting beat up. And energy, man, acting like a good hedge, as it should. We've got consumer staples showing up nicely, utilities. Okay. All right. So let's end it there. Let's land the plane. Let's move on. Everybody, we're going to stream again on Wednesday, and I'll double check with Daryl, but it may be the case where we stream in the morning, and for sure we're going to stream in the afternoon when we do the NVIDIA watch party. So look for the posting of the live streams on either of our channels, and we'll go from there. Let me wish you good luck with your trades this week. Let's see what this market has in store for us. And let's keep making the right moves that are going to build long-term wealth. From my perspective, I know Daryl has a different intent and he has got different goals. My goal is long-term wealth development. And this market to me is a good market. It's a good market where I get to buy stocks at a discount. And I need to remind myself of that methodology, because things can get really crummy and they can kind of be not fun to watch. But just remind yourself, 22, what happened in 22? How great was that opportunity? It looked like a horrible train wreck, but it was a great opportunity to buy. I can go back to all these episodes where it did look like a train wreck, but it was actually a great time to buy. Any departing thoughts, Daryl, you want to leave the audience with?
No, just thank everyone for joining. We appreciate you attending and hope we can all learn something together. Wish you the best.
Excellent. Well said, sir. Everybody, have a terrific week, and we'll catch you on the next live stream.
Take care.